Hey, how you doing? Welcome to Wall Street Weatherman. I'm Greg, and today's show is how to buy stocks safely. I was thinking about I came up with this show and a little bit, more of going back and looking at what I talked about that when before I was retired and I was still sales manager and IT before that that uh, yes, what I wish is I wish that I could get that feel and that pulse for the market, and I am absolutely going to continue with that. And by the way, that maybe things change, from one day to the next. Maybe it's once a week. Whenever there's something that really is shifting in the market, it could be, and just a single earnings report or a rotation between sectors in the market. Just deciphering everything and distilling it down to give you a great feel. But also, I went back in time and thought, what would I really want at that point in time? I would want to learn great habits and logistics of, you know, trading in the market. And with that in mind, I want to clarify a little bit that yes, I trade and I also invest. And what I'm going to share as far as my method that works for me is that this applies to both. This applies to if you're a long-term investor, if you are just trading stocks. Um, I'm going to apply it to both. For me personally, I love it when I do more trading at this point in time because, as you know, I'm up pre-market before the market opens, all the way throughout the day, after the market closes, and into the weekend as well, and I mean, you finish with the US market and Asian markets open and the globe keeps going all the way around. But as you know, I'm fascinated with looking at it through the lens of my economics degree and learning through that language about everything going on in the world. It's just I love it, and I'll talk about it later. But I don't spend, I'm not just micro trading and just always. That's not. I'm gathering, analyzing, spending most of my time doing that. But I'll talk about that a little bit more. So anyhow, I thought about that saying about give someone a fish, they'll eat for a day. Teach someone how to fish, they'll eat for a lifetime. And if I could go back and share with myself back then, I would absolutely want to provide those strategies and those habits of how to be a good trader and a good investor. And so I'm going to throw that in and still give you that pulse on the market and kind of make it, I want it to be practical. I've shared with you, this is not there are no endorsements there. No one is paying me for anything. Um, I'm doing this because I love it and I want to share with the past me or, my son or whoever, whomever is as interested as I am. And so anyhow, continuing with that pulse and the feel and but also providing the habits and the discipline. And with that in mind, I came up with uh, four tenets, four guideposts for today's show about how to buy stocks safely. And safely is a very key word for me. Those four guideposts are analyze, thesis, uh, catalyst, and discipline. So analyze, thesis, catalyst, and then discipline. Discipline, so important. And I wanted to start with that. So when I'm looking at a trade, when I'm watching stocks and staying in touch with them and getting interested and then seeing something, get more and more interesting with as it, moves into my overall thesis, those are the four steps that I use. But I will I will analyze going into the stock and going into all the important numbers and ratios. And the next show I'm going to do about all of those specific numbers, not complicated, just getting like, again, keeping it simple so that you can get a good, accurate, comparison to competition, all that good stuff. But when I've analyzed, when I've developed my thesis very specifically, and then it comes time for the catalyst. And I will be looking for maybe one or two catalysts in my mind, but then also something that's unexpected, which is so much fun because things happen every single day that just come out of nowhere. So I'll be watching for that catalyst. And many times when I am interested in a stock and it's moved from interesting to very interesting to, as I like to say, slap in the face, where it's just, you just can't ignore it any longer. It's become so intriguing that I will almost always wait for a stock to pull back in price until I buy. And believe it or not, this can be very challenging to have all of your homework work out and to see a stock just move right into everything that you think is has a higher probability of occurring, and then to hold on and to wait for that catalyst. One of the catalysts that I pretty much always include is a pullback in price. And so the stock is going up in price and going up in price, and I will wait until there's a dip in price to get in there with my first tranche. As we talked about previously, you've got, the overall allocation to that one stock that you've made. You're saying, I'm going to invest this much, $100, for example. And then you divide it into fours, you divide it into quarters, into, $25 each. And each one of those is your tranche. Your first tranche goes in for me only when there's a dip in price. A part of that is simple mean regression, the mean being the average price of that stock. And when it does dip down, automatically there's kind of this pull, not kind of, there's a pull of that dip in price to come back to the average mean price. So there's this energy that wants it to come back up. And there are other things too, but that's just one of those last little things that I wait for, but very important, because getting that investment like a rock that's just sitting there, getting the initial inertia going to, it takes so much energy. Once you have a little bit of momentum, building on that momentum, uh, in my mind, can be a lot easier. That first quarter of your investment can be the hardest one. And again, so the discipline to wait for that price dip is crucial. And with that in mind, I can tell you because I've gone back and looked at it, that it can be so hard to watch the price of the stock continue to rise without taking a dip, and to watch it, get away from you, as they say a little bit. For every time I have taken 1/4 of my full allocation to a single stock to invest, that first tranche, for every one time I've done that, I have watched a stock pass me by 20 times. And I'm not kidding you, 20 times. Now, going back in time, I used to see this happen and think, oh my gosh, and get FOMO, fear of missing out. And then the following time, I would chase a stock. I would reach for it, while it was going up. And I can't tell you the lessons I've learned from, you see a stock really sort of, increase in price sharply, and you grab at it, And the same thing with that mean reversion. All of a sudden it comes back down and continues along its path. Well, my cost basis is higher than where it is now, and so I'm automatically already at a loss. I would much rather be at the bottom, and statistically, I can't tell you uh, how valuable it is to have that discipline. So there you go. Along that line, I have also said that those missed opportunities where it continues and there's no dip for me to get in and it continues. And believe me, there will be a dip. Every stock pulls back. There has never been a stock in history that doesn't, the price doesn't fall or come back a little bit, a lot. We were talking about Nvidia. Look at some of the pullbacks in time just this year, 2025. That thing came flying back from like 150 to almost 90 bucks. I mean, that's massive for a stock that size. So they always come back. They will come back to you, I promise. But the ones that don't, I've found it really useful to frame it as um, a success. That instead of looking at it like, sure, it was a missed opportunity, but I now look at it as I was right. That was a success because the my analysis, my thesis was correct. The stock kept rising. And so I was correct. All that I missed is the timing on it. And so 100%, I look at that as a success. And along that line, I'm just, as always, just going to jump around the little show outline that I have, that along that line of thought, when I have a stock that doesn't work, when I put in that first tranche and the price drops, and we'll talk about when to hold or when to sell, the price drops on that and I sell and I take that loss, I look at that as a the tuition to a class, like a graduate class in trading. And you know how carefully I analyze my losses, far more carefully than things that go well, because I want to learn from those. And if I can realize, okay, here's what I was thinking, here's where it went wrong, here's what not to do next time, and instill that into my discipline so I don't do it again, I look at that as paying, a reasonable price to go to class and to learn something, to become, a better investor, a better trader in the future. So, and that's not being a Pollyanna. That's true. As long as you put in the work and as long as you learn from that mistake and you don't repeat it, which is why I spend so much time on that, on the losses. And so, one other thing is that there are two quotes that I'm going to do one quote and then break this up and do a second part to this, second show to this, and there are a couple of quotes. So the one quote, first quote that I want to share with you is from Carter Worth. Carter Worth is a trader here now. You can see him on CNBC quite often, a little more than Bloomberg, and they have his quote in the Wall Street Journal and things like that. But he's a technical analyst, and he said that when he was first starting out, his mentor told him something, and he said that nothing is lost by delaying all new buying. Okay? Nothing is lost by delaying all new buying. And that comes back to my first principle of investing. Okay? People get into investing to make money, obviously, but that's number two. Number one. Number two is, yeah, make money, okay, and figure out how and, all of that. But number one, before that, before you can ever make money, number one is do not lose your money. And not a lot of people talk about this. And preservation of capital is always first before you can make money. So if before you even get into a stock, it continues to go and you don't invest that first tranche into it, it's a victory because you adhere to your first principle. The discipline that you had is a success, and you also didn't lose any money. That is a success. So I really I have found that that mindset is so key to always say, did I lose any money? No, I did not. Okay. And that's a success. And so remember, nothing is lost by delaying all new buying. So there you go. I will see you in the next video.